What are the key indicators that a mortgage broker is competent?
Yeah, that's a good one. I think the best way to really assess whether your mortgage broker is competent, because mortgage brokers have to work in the client's best interest, right? So I think to assess a level of competency is to identify how comfortable you feel with the broker, and the broker should be asking you as the client a lot of questions about your medium and long-term requirements and objectives for that particular property. So if you've got a transactional broker that just literally wants to do a bit of a tick and flick, find a loan for you very quickly without asking a lot of questions around what are your intentions for the property that you're buying? Do you want to live in it forever? Are you intending on needing some cash to renovate the property? Are you looking to flip it? Are you maybe looking to keep that property as an investment property down the track because it's a bit of a stepping stone property, and in 5 years' time, you want to buy a forever home? So depending on your answer to any of those questions might completely change the way that you need to structure the lending strategy when it comes to borrowing. So you really want your mortgage broker to be asking you a lot of questions around your intentions for the property and your future financial circumstances. So that's really important. The broker should also have a large range of lenders to choose from. So, I'm licensed through Connective, and if you look at any of the major aggregators like Connective, AFG, Loan Market, we've all got 40 plus lenders on our panel that we can select to make sure we choose the right loan for our clients. And each one of those lenders has multiple products. So you're talking hundreds of different products. If you've got a mortgage broker that might only have a couple of products, you really need to question whether or not the strategy that they can find for you is going to be the best one that you can possibly find out there, excluding all the others that are out there in the market. And look, I think the other thing when it comes to competency as well is just making sure that they're qualified, making sure that they're a member of relevant industry bodies like the MFAA or the FBAA, and also just a general sense that do they have a professional business? Do they dress professionally? Do they talk professionally? Maybe do they have a nice office? And do they invest in their business? We have to obtain a lot of sensitive information from clients. So we prefer not to receive any of that via email, but the systems that we use include a secure online portal for clients to upload all of that sensitive financial information, which in the era that we're in now, when cybersecurity is such a real threat, I think that's something that's really important. So really look for a broker that's going to treat your information as securely as possible to make sure that they're really competent and looking after yourself.
Yeah, for sure. So how often should homeowners consider refinancing their mortgage? And what are the potential benefits and drawbacks of doing this?
Yeah, so refinancing, it's a thing that we look at pretty regularly for our clients. I would say you don't necessarily want to refinance every year, but you should be reviewing your financial arrangements every year. And that's to ensure that the rate that you're currently paying with your lender is still competitive. You may not actually have to refinance it to another lender, but there's a thing that the common sort of term for it is loyalty tax when it comes to being with a lender for a long period of time. You see it in insurance as well, whether it's car insurance or house insurance or life insurance, that if you've been a client of that particular insurer or bank for many years, you find that you're typically paying rates that are higher than what they're offering their new clients. So reviewing your loan structure every year will help you determine whether or not the rate that you're paying is still competitive, which means that you can then ask your existing lender to reduce those rates. And if they're not willing to offer a more competitive rate, that's when you might look to refinance for the purpose of reducing your rate. But when it comes to refinancing, there are far more reasons than just rates alone to refinance. So as you've been owning your home for a number of years, typically the value of your property is going to increase, which means that that loan to value ratio that we talked about originally in the conversation will decrease. So you might have started with an 80% loan to value ratio because you can contributed a 20% deposit and you borrowed 80. So if you had $1 million home and an $800,000 loan, you'd be 80%. But if your property had increased in value over the last 5 years and now might be worth $1.5 million, then all of a sudden your loan to value ratio is going to be significantly lower. And if it's now below 60%, it's important to revalue your home, take that information to the lender, and then they might re-rate you based on the lower LVR.
Yeah, okay.
So that's also an important one. So you can keep it with the same lender or move it elsewhere. But understanding the new value of your home, it empowers you to make some choices around, do you want to do something with the newfound equity that you now have in your property? So we might look to refinance in the process of drawing down some equity so that you can use that money for an investment property. You might use it for other purposes like school fees or a renovation or an overseas holiday or a new car, or to invest in shares or something, like that, if you're getting advice to do that. So there are a whole range of reasons to look at refinancing down the track other than just for a better rate.
Yeah.
And some lenders offer cashback offers as well. So if you refinance, they'll give you $2,000 or $3,000 as a lump sum cashback. So there might be some benefits like that from time to time. Now, I think the only real drawbacks when it comes to refinancing should be just a small time cost in terms of meeting with your broker, supplying the paperwork and getting that done, because you should only really be refinancing if it's going to benefit you quite materially. Having said that, there are minor costs that are involved when it comes to refinancing. So your current lender will most likely have an exit fee. Typically, it's around that $300 mark. The new lender might have a setup cost, and that's generally also up to around that $300 mark. So you might have several $100s of small fees that are incurred, and then sort of registration fees and land title fees again, which are a few $100s. So any refinance that you do, obviously the cost needs to be far outweighed by the financial benefit that you're going to receive in order to go through that process.
Yeah, thanks for that. Thanks for sharing your knowledge on all those topics. Really appreciate it.
No problem. No, great to speak with you, and well done on this series. It's a great and informative series for your clients.
Thanks, appreciate that.